Welcome to our weekly update on macroeconomy and different topics that we're covering at Market Insider. We're talking to a lot of experts on the economy, and I'm going to share with you some of the things I'm seeing behind the headlines. We have been told that AI is not going to cost us much. For a fixed fee every month, $20, $30, $100, we're going to have this tool. It's going to do everything for us. And we essentially don't even have to work. But last week, something big happened with AI. Microsoft stopped using Claude because of cost. It encourages engineers not to use Claude because of cost. Uber CTO came out and said that they ran through the entire AI budget of the company over the first 4 months, meaning the cost of AI is going up for us users. And in some companies, it's estimated that it costs them between $500 to $2,000 per month per engineer who was using AI. I had my personal experience with building a PowerPoint, which the tool kept asking me to buy more credits, and I did. And it ended up costing me $80 to build this PowerPoint. It was a good chunk of work, but had I known it would cost me $80, I might have had second thoughts about using AI or not. But I also did some other project, which was an expense report matching, which would have been a tedious task that would cost me 2 to 3, 4 hours if I was to do it myself. And I gave this task to AI and it cost me only $3. But what happened to me after the last few weeks, I'm watching the credits I'm using. So I'm paying attention to the cost. This is going to happen across the board with different companies. CFOs and CEOs are going to look at this and they're going to be wondering, how much does it cost for us to use AI versus using our own manpower? But the boom of AI is still going, especially in the stock market. The stock market has been going up significantly over the last few weeks, and it all has to do with AI. And honestly, I think the stock market is confused on how to value AI companies because their earnings are unreal. There are different kinds of companies. They've gone up by tenfold. We have multiple trillion-dollar companies now. When you look at the valuations, some people might say this is a bubble. It's kind of like the 99 and 2000. This is like the internet bubble. These valuations are crazy. But when you look at the valuations, the earnings are justifying these valuations. Let's take a look at Micron, for example. The company is now worth over $1 trillion, but their forward earning is going to be $150 billion. That gives them the price-to-earning ratio of 7, 6.5 to 7. That's very low for a company that's growing significantly like this. And their margins are also expanding. So it's a good question whether we're going to hit a bubble or a pause or a break in the AI boom. And will the cost be a factor for the adoption? Now let's go to the next topic. We also had another key data come out, which was the consumer sentiment data. Every month, University of Michigan puts out this survey and surveys the consumers to see how they're doing how they're feeling about the economy. And this time, the survey was at record low compared to many, many decades. So the consumers are not feeling good about the economy. But there's mixed feelings about this survey among the experts. Many experts think this data is not correct. So let's look into this. Are the consumers really stopping spending? Consumer spending is 70% of the economy. It's really everything in the US economy. If the consumers stop spending, the economy is in trouble. We're going to be facing recession. But when we look at the data, the consumer is still spending. Some people might say it's because the consumer spending is going up because of inflation, because everything costs more, so you have to spend more. And as a result of it, the consumer spending is going up. But when we adjust the numbers for inflation, the spending is still going up. So what's really happening? Are the incomes going up significantly? When we look at the income compared to inflation, the incomes haven't gone up. But when we look at the saving rates, it looks like the consumer is tapping into their savings. They're not saving as much as they were. So the consumer is still spending. They're not feeling good about the economy. At the same time, the stock market is at its highs. And the employment is that we're at full employment. Why is the consumer not feeling good about the prospect of the economy when the stock market is at its highs and the unemployment rate is low and they're still spending? Some people say these surveys are usually more negative than the truth because of the media coverage. And recently, the negative media coverage has been everywhere, especially about the war with Iran. And that has really impacted people's thinking about the future. While the gas prices and other prices have actually been a factor, but the media coverage has been very negative. And at the same time, people are not sure about their future and jobs because AI is coming and is disrupting a lot of the workers. And a lot of the AI CEOs are out there saying that a lot of people are going to be unemployed in 6 months to a year or 2 years. Now, it's going to be a good question whether this will happen or not. But if you're hearing that we're going to need universal basic income for everyone because you're not going to have a job and you're going to be unemployed, you're going to be pessimistic about the future of the economy. Now, we have to see what's going to happen. Will the consumer continue spending the way they're spending? And will they be feeling differently about the economy and acting differently, which they're doing right now? That's something we're going to be watching and we're going to report to you. Thank you for watching these updates. We're going to share with you every week. I'm Siyamak, this is Market Insider. We'll see you next week.